Greetings, ladies and gentlemen, and welcome back to the Minecraft progression series. Welcome to beta 1.3_01, or for those of you who were around back in the day, this is the update where SkyDoesMinecraft started playing. Now, I understand the controversy around him, but it's still, he was a pivotal figure in this game on the internet, so I might as well mention that. In addition, outside of celebrity figures, let's look at some of the new bases in the game. We'll start with the crafting recipes. And boy, were there quite a few. Furthermore, this famous painting that people tend to forget, well, not really, people tend to remember this painting, was added in this update. I wanted to show it off here because I believe it looks really cool. Turns out this is actually a real world file from Alpha that you can get a seed of. They found it on the internet. Like I said in a previous episode, we have reinstated the use of armor, because I realized that this game was designed with armor in mind, and Pokemon in Minecraft are not similar in where I can do a challenge run of them in the same way. For the sake of Pokemon, why I limit myself so hard is because the game was designed with single player in mind you, but that it's possible to do it using multiplayer rules. It is possible to do it without armor, it's just a lot harder. Look at how many recipes there are. Good. So allow us to do this in order. We have the pressure plate and the other pressure plate. The pressure plate can be crafted in this way. You get 2 from wood, or if you have clean stone, you can do it with this. My reasoning for creating the pressure plates here is because I want to place them here. That way, I can get in and out without having to press a button. I know, it sounds ridiculous, but that is the case. In addition, this is going to be how we set up the song, because I said we were going to do something with note blocks once repeaters appear. And I wasn't kidding about that. In addition, just for more decorative purposes, I've added a iron, gold, and diamond block. The reason I did this, even though I have no necessity to do so, is simply because I built this wool monument out of reference to the Vex Super Hostile maps from 2012-2013. What I forgot to mention is that on Vex Super Hostile maps back in the day, you had to get a diamond, an iron, and a gold block. That's just something that people did. And I know not everyone played Vex Super Hostile. It's one of those adventure maps, you know. I might even do a reference to Epic Jump Map or something. Or a reference to Hunger Games. I mean, yeah, I'll mod the world to make it a Hunger Games world for one episode. It would be very nice, if you ask me. Can you imagine playing Hunger Games on this world file? That'd be great. Yes, you can do single-player Hunger Games. Back in the day, Bayesian Canadian did a mod showcase mod. It was pretty cool. So now, let us move on to more pressing matters. Because pressure plates are good, but not essential. Other changes include the smooth lighting. You can tell that the lighting looks a lot better. Or at the very least, that it is no longer as bad as it used to be in some respect. What the hell happened? I hate when that happens. Regardless, wow, my taskbar just completely shut down. That's fine. Sulfur was now changed to gunpowder. Levers are the same, I just have in my inventory. And stone here can be used to create slabs, as will be demonstrated here. Please place. Thank you. Slabs. So from now on, if I want to continue using this slab model, I have to cook the slabs, the stone. And I'm not too big on it, but if I have to do it, you have to do it, right? Up next, repeaters are finally in the game. Took them long enough, but we can finally make these. And we're going to be using a lot of these. From the previous update, because I failed to complete it last time, simply due to my death and failure to account for spider damage, we can make dispensers. I wanted to build a storage room with dispensers, but I have so many storage rooms that I'm never going to use them all. So let's keep it like this. Keep it simple. You know what? I don't need the lever. Bye. And I don't need the gunpowder either. I can make a mob farm later. In addition, these 3 slabs were added into the game. We have the stone slab, the sandstone slab, and the wooden slab. And finally, the greatest addition, which is why I waited till nighttime to show this off, is the Minecraft bed. We only had one color back in the day. Wow, I messed that up. It's called red. Let's show it off, ladies and gentlemen. You can sleep. There's a slight chance that a zombie will spawn next to you, but if not, you can wake up in the morning and skip the night. People who watched season 1 are well aware of the fact that I actually did die to a zombie spawning next to me. And I got, not mad, but I was a bit confused at why it happened at first. And then I remembered, oh right, I used to play this back in the day. Those are the new crafting recipes introduced in beta 1.3_01. Are there more? Not in terms of the update, and in fact, dispensers are from the previous update. What else occurred? Right, the file saving switched, so this world cannot be opened up in an older version of the game. It won't support it. I did not make a backup because that would entail some hint to the past, and we don't want to do that. We want to appear to be progressing. In other words, we're going to do a little bit of design here on the house. Why? Because I want to. And that design will be like so. We pick a nice area. I say starting here. And we'll go in order. Why? No reason. I figured if I'm going to show off the new addition to the game, that I may as well show them off like that. And while I don't think that looks the best, it still shows the update to the game and proves it in the context of the world. Same with this wool monument. This wool monument is supposed to represent the original world of color, because it wasn't called that back in the day, but it might as well have been. Beta 1.2_02 super hostile cake. Yay. Here's my issue. And this is a big issue. How am I going to make the note block farm? Because sadly, shears do not exist yet in the game. Note block farm? My apologies. The note block contraption. That is the big question. While I ponder over that, I decided to, for the sake of this episode, do something a little different. I want to talk about my passion. Because beta 1.3_01 was more relevant in terms of celebritydom rather than the game updating in a way that's significant. Don't get me wrong, the redstone repeater is a significant update. Mob behavior also changed. But I remember this update more for who was in it rather than what it did for the game. And I don't know about other people, but I think some people would be inclined to agree with me. Not everyone, obviously, but some. What else? Was it really like this? Did I really organize my inventory like this? Weird. Oh no, it's that I used to do it like this. And then I would have another 2 buckets of water with me. That's what I used to do. Okay. As for why I organize my inventory like this, I explained this from a lot of multiplayer from when I was younger. Because I do like this game quite a bit. Excellent. We just need to get some sticks and make the dispenser location. And how I believe I am going to do the dispenser is as follows. Oh, one more thing. That's a pretty big one. This is not the first bed I've made in the world. As a matter of fact, I have a bed somewhere in the really far reaches of the world. I don't remember where. But it exists. And it is out there. If I ever run into it, it'll be a welcome surprise. And that's about it. As for this bed, there's only one place I really want it to go. Not in the tree farm. The old tree farm that doesn't work anymore. But rather here. You can only sleep at night, by the way. Ladies and gentlemen, you cannot sleep during the day. Without some exploit, mind you. With an exploit, you can do it, but remembering how to do the exploit is not something that I spend too much time on. And as you can already see, I've done some redecorating off screen using the new slabs. Do I like these slabs more than the cobblestone slabs? Yes. But do I understand why they changed it? Of course. As for what I want to do here, while I make my way down, I want to set up a dispenser. And to do that, it'll be easy. I'll set it up here. Put the pressure plate here. And then place the dispenser here. What do I want this to dispense? Isn't it obvious? No, it's not. Aww. To dispense iron picks. Well, more accurately, I want it to dispense a diamond pick. Because diamonds are what we need to travel. So while I make my way up, I'm going to take a bite of my rice. Okay, we're good. Because food is delicious. We make our way up as so and get some diamonds. We're going to get 3 times 9, 27. We don't have that many diamonds, by the way. We're going to get 3. Yes, 3 of them for now. Actually, no, that's right. 3 diamonds. Because if we want to get a quick diamond pick, we'll do it. But then, and this is the best one. 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. Are going to become iron picks. And they will go into the dispenser, and that's how we show proof of concept in that world. Is it the most effective use of a dispenser? No. But I am here to show off what I should have shown off in the previous update. I apologize for that. I just happened to get a bit frustrated and didn't want to show you me grinding. As I've said before, I want to be an accountant. YouTube is just some pastime hobby of mine. And that's something that I believe a lot of people who watch this content know already. So why am I bringing it up? Well, I decided I want to talk about accounting for a little bit in this video. Because it's fun. Now, people who don't know about accounting, it's a pretty simple process. That's a lie. It's actually a bit harder than simple, but you get the gist. It's fun. To calculate anything, you start with your total revenue. You can subtract the total variable cost, or as my Chinese professor says, costas, because he has a thick accent, and I mean like thick accent. You could subtract it, the total variable cost, and you'll get the contribution margin. From there, if you want to find the operating income, you subtract the fixed costs from the contribution margin. And then to get the net income, you have to subtract a few other things. So specifically, your taxes and other expenses. These other expenses can be a variety of, well, expenses. I mean, that's honestly the best way to put it. They can be a lot of expenses. They're pretty expensive too. So let's use some example questions. Let's say you have the costs of finished goods inventory. My bad. If you have the finished good inventory at the beginning, the finished good inventory at the end, and the cost of goods available up for sale. So this is a nice little hypothetical scenario wherein you'll be given a lot of information, more information than you would realistically have access to outside of being in the accounting department. You wouldn't have this information if you were, say, the general public unless they put it in the balance sheet. But that's also a really interesting concept about accounting. You get it in the balance sheet and it will all be great. So if you want to find the cost of goods manufactured, what you'll take is the cost of goods available for sale minus the finished goods inventory at the beginning. You know the cost of goods available for sale in this case is say 230,000. Why? Because we can. Okay? And you'll subtract that by the finished goods inventory, which is about 90,000. And these numbers can be anything insofar that they follow the international rules and US GAAP. US GAAP is the one that's important because I live in US, obviously. They're both important though, and you should know them both. So you'll subtract it, 230,000 minus 90,000 will give you $140,000, and that will be your cost of goods manufactured. And from there, if you want the cost of goods sold, because it's useful and relevant information to what you need to get, you'd have to subtract the finished goods inventory in the beginning. You have to get that, and then you add the cost of goods manufactured, and then you subtract the finished goods inventory at the end. So you'll get your 90,000, and you add it by 140,000, and then you subtract 83,000, because I already said that the finished good inventory ending is 83,000. And if you put that in a calculator, you find out that it's $147,000. Yeah, I think you understand where this is going. Let's look at, say, operations from 2017 Ace Manufacturing Corporation. We know that their finished good inventory at the beginning was 99,000. We know that their finished good inventory at the end was 104,000. Their cost of goods available for sale was $250,000. Okay, these are pretty large amounts of money because it turns out selling costs money. You need to spend money to make money. In order to obtain these values, we then need the cost of goods manufactured, and we know that that's 250,000 because that's what it says, subtracted by the finished good inventory at the beginning, so 99,000, and you'll get $151,000. Now, this is before taxes, before expenses, and everything else. This is just your hard numbers, and no more, no less. We'll get those later. Maybe for a different company, but we'll get them eventually. That is a promise. And then from there, you need the cost of goods sold. So you'll take the finished good inventory at the start, which again is $99,000. This is pretty expensive, by the way. This is a lot of money. You know, $99,000 is some people's annual income. Let that sink in. That's not very common. Most people are living on way less in many parts of the world. But in America, that's just people making money. Specifically successful businesses making money, not the average Joe. That's just me letting you know, because people like to say privilege. I like to say people who earned it, because it's true. Some people earn more money than others. But you'll get the cost of goods sold, which is you need to get the finished good inventory at the start, so it'll be $99,000 again. And then from there, you'll add the cost of goods available, which is $151,000, and you'll subtract once more from the finished goods inventory at the end, which is $104,000. From there, you'll get your cost of goods sold equaling to $146,000. And I'm seriously out of slabs. Unbelievable. Now let's look at Vellon Corporation, another corporation in the real world that happens to sell things as well. We know that they estimated having $300,000 in manufacturing overhead. What USB item, by the way, is not recognized? That's what I want to find out. What is my computer failing to recognize? It can't be something that relevant. But while I check, please enjoy the image of this screen. Nothing that I could find. So let's just go back to Vellon Corporation. Vellon Corporation, my apologies, ladies and gentlemen. Vellon Corporation. They estimate having $300,000 in manufacturing overhead, which is MOH if you want to make it easier on yourself and your accounting and everything else. They also estimate 5,000 direct labor hours. In reality, their manufacturing overhead was $320,000. And their actual direct labor hours were 4,900, so 100 less than they originally envisioned, which seems to be a good thing. At least, from what I can tell, that is a good thing. We know that the predetermined overhead rate is the estimated manufacturing overhead cost, so that'll be $300,000 divided by the estimated direct labor. And according to the direct labor estimate, we needed 5,000 of those hours. Those 5,000 hours are not easy, right? You gotta pay them all. Okay? You gotta pay people. People need to be paid what they're owed. Okay, otherwise you're running something illegal. So you'll get $300,000 divided by 5,000, and that'll give you $60 per direct labor hour, which is not cheap. I'll tell you that much. Not very little in business is actually cheap when you analyze it to a certain extent, right? So then you get the applied manufacturing overhead because you need to get the real number. And to get that, you need the predetermined manufacturing overhead rate. And we already calculated that. It's $60 per direct labor hour. And then you will multiply that by your actual direct labor hour. I don't even know what's making that noise anymore, and I don't care to find out. Okay, so we hit a dead end, actually, funnily enough. Alright, did we make it to the chunk error? Did we? I believe that we've made it far enough. Although only the time can tell, and right now it's dark and I left the bed somewhere. Damn it. Okay, so we won't know for a bit. So from there, it will multiply by $60 over direct labor hour, and we'll multiply that by 4,900 direct labor hours. The direct labor hours cancel out because they're variables in this case, and we're left with $294,000 being your actual applied overhead rate. And that's how you find that. I know it's a bit weird to explain that without a visual, but I'm just assuming that most of you aren't studying this, and I'm just giving you, something I like doing. And the reason being, it's fun. Okay? I like to have fun in what I do. Sorry about that. Now let's look at Jeffrey Hospital Entertainment. We know that their estimated manufacturing overhead cost is $750,000. Okay, these guys are not messing around. These guys are trying to make bank. Okay? And very frequently these guys just want to make bank. That's part of being a person, right? And then their estimated daily labor hours are also a pretty big number. That number in this case being... Hold on, let me see if I don't get attacked by a zombie. Good. Skeletons are here though. And I don't like that. And the answer, ladies and gentlemen, is yes. We did make it to the chunk error. Hold on, before I continue this, let's get rid of him. Burn, baby, burn. One more. Too low. Got him. Oh, it's a duck. Damn it. This seems long enough. Hopefully. If it's not long enough, then I don't know what is. And this place could be explored too. That's the coolest part about it. Right? This is the coolest part, that you can explore all of this. And I just love chunk errors. I know I say this before and I'll say it again, but I just think chunk errors are really cool in Minecraft. And I know that makes me a little weird, but I genuinely find them cool looking. So what are we going to do? First, I'll tell you what we're going to do. We're going to get this side here and collect all the wood. All of it. And then I'll do the note block stuff off screen. Why? Because trust me, you don't want to see me fidget with a picture and myself here just being an idiot. And because that would take way too long. So regardless, we get the predetermined overhead rate being 750,000, because that's how much they're estimated in manufacturing overhead costs. And then, okay, which device is it? Is it this one? Is it my charger? That has to be it, right? Because I've been getting that message in multiple videos and it stopped being endearing. Okay. Something tells me this is long enough. I know it's a bit quiet here, but I might as well just do a little bit of terraforming. Not too much. Not even terraforming, just landscaping. Good. Just the ones that are immediately in my way, not the ones that are too big, like that one. You know what? 15. That's a little bit under stack, but close enough. Okay. Good enough. So if you want to see me fidget with note blocks, please, look for the next video. It's going to be a proof video, most likely. That's just going to be me in quiet with music in the background, and that's going to be how we do it. Other than that, we're almost done here. We already made it to the chunk error. This is where new Minecraft begins, and old Minecraft stays here. What else? Because a lot has happened, right? A lot has happened. Still, we're going to take the 750,000 and divide it by 15,000, because that's the machine hours, or DH, or MH, if you want to get the abbreviation. And you'll get $50 over machine hours. So when you get the applied machine hour, manufacturing over rate, my apologies, applying machine hour specifically, you'll get $50 over machine hour, multiplied by 15,300, there we go, machine hours. And that'll give you $765,000. As for where the machine hour variable goes away, they cancel each other out because machine hours in the bottom of the denominator and machine hours in the numerator. And all you're left with is dollars. It's cool how math works, huh? And now we get Rector Company manufacturers. We know that they estimate 2,500,000 in manufacturing overhead costs. And we know that they estimate 250,000 in direct labor hours. And they also estimate 400,000 in machine hours. So using labor hours, we can get the predetermined overhead rate being estimated manufacturing overhead cost divided by estimated daily labor hours, and we'll get 2,500,000 divided by 250,000, which will give you $10 per direct labor hour. You see, that number makes sense to me. Makes a lot of sense to me. And that's good. I want the numbers to make sense. Otherwise, we're doing something wrong. If the numbers don't make sense, we're not doing something right. Then you can assume that the actual predetermined overhead rate, the actual, daily labor hours, using real daily labor hours, were $10 per direct labor hour multiplied by 300 direct labor hours. And we know that it's 300 because the problem says so. And that gives you, say, $3,000 that you can account for. Very, very cool, no? And what makes it so interesting is that the numbers will line up, and if they don't line up, you can tell something's wrong. Either foul play or a miscalculation. You have to find it, but when you find it, it's satisfying. Okay? I was never too big on Minesweeper, but if you like Minesweeper, you're gonna love this. And from there we get $3,000 as your actual overhead rate that is applied. Okay? And then you can get it with machine hours as well. So you'll do the same thing of 2,500,000 divided by 400,000, and you multiply it by 300, and you get that number. You get $6.25 per machine hour. Then you'll take $6.25 per machine hour, and you'll multiply it by 140 machine hours. Yes, 140 machine hours. You know it's 140 machine hours because it's given to you in the problem, not because you solved for it. If you had to solve for it, then you need to consult the electric people at the company. But I'm not going to make you do that because I know not all of you work for a company that has these guys in them. 2, 3, 4, 5, 6, 7, 8. Okay. What is causing the graphical glitch though? I don't like that graphical glitch. It's very annoying. I promised to do redstone, and I'm going to do it. Hold on. Watch this fast clicks. Awesome. That's not enough, but we'll never get there if we don't at least try. And I'm trying to wait till we get shears so that I don't have to go searching for individual trees, and I can just get them from here. It'll be faster too. You know what? I wasn't feeling the slabs, but now that I look at it from a distance, it looks pretty nice. Okay, it looks very nice indeed. Okay, so you get your $6.25, and you multiply it by 140 machine hours, and you get $835. And that's your applied manufacturing overhead cost. Pretty cool, huh? Pretty interesting if you ask me. You can learn a lot very quickly. Very quickly indeed. It's always unique to learn things. And now let's look at Lucy Sportswear. We know that the right material is 100 and my bad. Why do I keep saying 100? Is $13,700. And we know the direct labor cost is $4,800. We know that the administrative cost is $1,400. In a sense, this stuff is expensive, okay? No, this isn't Mickey Mouse stuff. This stuff costs money. Real adult money. Not baby change. Real change. Real cash. Real expenses. Real finances. Very smart guy stuff. I'm kidding. You can do this if you have a decent calculator and some somewhat average memory capacity. Besides the point, you know the selling cost will be $5,600. Sleep. Please don't kill me. Good. As for why I'm keeping these stones, clean stone here, it's because these are going to become repeaters. I need to mine more because I'm running out of resources. I had multiple stacks of cobblestone, and now look at what happened to it. Bam. Okay, there's a graphical glitch going on, and I'm not a fan of it. I think you guys can see it actually. It looks pretty bad. Pretty bad indeed. Okay. And we know that the job has 800 machine hours, actual machine hours, $25 in applied rate, so you're no longer going to get the applied rate, it's already given to you. And you're also going to be getting 7,000 good shirts. That's how many goods can be sold here. Either the rest had a defect or some other issue. And you need to find the cost of goods sold per shirt. To find the cost of goods sold per unit, you need the formula, open parentheses, direct material plus direct labor plus manufacturing overhead, close parentheses, divided by the number of units. So from there you get 13,700 plus 4,800 plus, and this is the part that gets people, 800 times 25. That's your manufacturing overhead multiplied by your applied rate. So that's the real number, not the estimate number. You add them all up and you divide by the number. In this case, it was 7,000 goods, so we're multiplying by 7,000. We're dividing by 7,000. We're dividing by 7,000. And what that number gives you is your answer to the question. Moving on, we have Rector Company again. What do we know? You know, they estimate. We already have these estimates. They estimate 2,500,000 manufacturing overhead. Using daily labor hour, you get the predetermined overhead rate, which is $10 divided by daily labor hour unit. Using manufacturing overhead, we get PDOH rate, so the predetermined rate, it's $6.25. We already calculated this in the previous questions. I'm just telling you again so that you don't have to go back and check for it. We know that the estimated daily labor hour is 250,000, and the estimated machine hour is 400,000. But let's get the actual numbers now, because we don't like working with estimates unless they're really good estimates. And even then, rarely are estimates ever accurate. They give you an idea for sure, but are they ever accurate? Rarely. Very rarely indeed. So the real numbers are, you have for a human, why is it doing that? Why was I holding, whatever. Let's get up. Going up. Water glitches, that's fine. So regardless, we're going to get that number, and your actual daily labor hour is 245,000. Your actual machine hours are 410,000. And your manufacturing overhead is really big number. It's $2,515,000. Okay? Large, big boy numbers. Not Mickey Mouse stuff. Actually, it could be Mickey Mouse stuff because he made a lot of money. The old school Mickey Mouse stuff, not the modern stuff, because they're not making as much money as they used to. So to get the applied manufacturing overhead rate, you know what? This is far enough. We don't need to go further. This is good enough. This will give us our song. So I'll put the song here and get it done. It'll be great. I'll let you guys listen to it once we have mine cards, because the walking speed of the players is still too slow. But it's gonna be fun, okay? I promise you, it's going to be fun. I'm gonna need a lot more note blocks though. We don't have anywhere near enough wood. Nowhere near enough, but we'll get there. And it's not gonna be baby stuff, okay? It's gonna be like a minute long, or a bit longer actually. Like a minute and a half long is the goal, just to let you all know. And what is up with that tree? Okay. So to get your applied manufacturing overhead cost, you're gonna get 10 direct labor hours, because that's your applied for manufacturing overhead. That's your estimated, your predetermined overhead rate. And you multiply by your actual direct labor hours, which is $245,000, and that gives you $2,450,000. As for your manufacturing overhead, we know that the actual number was $245,000, and the baby number, the real number, was $2,515,000. So you'll do is to subtract, okay? You'll subtract it. So you get the real one, $2,515,000, subtracted by $2,450,000, and that'll give you $65,000, an amount that I think you under-applied it, because you only applied for that number, and your real number was under-applied. That's what you did. Under-applied. And using machine hours, we can do the same thing. We can get $2,562,500, which you get that by multiplying the 6.25 by 410,000. You get $2 million. $2,562,500. You'll take that number and you'll subtract it by $2,515,000, and you'll get $47,500 as your over applied, because your number is bigger. From there, we get the period costs. And to get the period costs, you're given quite a lot of items, okay? A lot of things. And why is my game so buggy? I don't understand that. Can anyone explain this to me? I can't. I don't even want to know anymore. So we'll be here. We'll just wait in the house, and I'm pretty much going to end the video in terms of moving, but in terms of actually talking about what I want to talk about, we're going to keep going with that for a little bit longer. Just a little longer. I do like the smoother lighting. It makes the game look better. Although this looks a bit suggestive, if you ask me. You still gotta love the fact that mobs still spawn here. Because you wouldn't think that, but with the grass, it really helps. A lot. The grass really helps things spawn here. I wasn't kidding though, 1.3 barely added anything. Okay, you know what? Let's actually stand in the skeleton farm. That way we can get some noise. Get some background noise in the video. It sounds better too. But I unplugged the device though. I don't get it. Is it my keyboard? Because that'd be kind of scuffed. If it really doesn't recognize my keyboard, that's pretty bad. If you ask me. A few things. Period costs cannot be manufacturing costs. That's just a little bit of a rule, you shall say. And not much else to know. Okay? So now, instead of some questions, we're going to talk about, okay, we're still going to get some questions, but we're going to talk about more rules now, because the formula, the math is easy, okay? The math for accounting is always easy. All the fun math is done by machines now, depressingly. But it's true, okay? Sadly, it's very true. I will admit that I do not believe any single one of you have clicked on this video thinking that we would talk about accounting, but it's what it is, right? This is what I want to do with my life. This is fun. Okay? And I know that the machines do the math now, but I still like to talk about the math, because the math is genuinely entertaining. So now if my pig's break, I can go here. Before we go, let's see if we can get some slimes here. No? Okay. No slime. That's fine. This is very unique, I'll give it that. Oh, this is still an old chunk, so ores are not as plentiful as they should be. Look at Shubi here. She looks so happy. Actually, fun fact, this doesn't have the depth that the new skins have. It only has some of the depth, not all of the depth, but that makes it nicer. So the period cost cannot be your manufacturing cost. So your raw material goes in inventory, your work in progress, and then finished goods, and then sell, and the selling is the cost of goods sold and income statements. Those are your expenses. The raw material, the work in progress, and the finished goods, and the sell are all recorded as assets. Okay? All selling, it goes on the income statement. Your cost of goods sold is not on the balance sheet. Beginning inventory formula is X. Okay? So if you want the ending balance, you get the beginning inventory plus the amount purchased in dollars minus the work in progress inventory in dollars. That gives you your ending balance. Your ending balance, so if you want the beginning inventory formula, it's ending balance minus the number of purchased in dollars plus the work in progress inventory. So let's say your amount purchased in dollars is $60,000. Just shoot on the ball. Now let's see your work in progress inventory is $61,500. Why these numbers? No real reason. Just because you can get them, right? Because it's interesting to learn about it. Oh, why was it breaking the glass? That's not good. Your ending balance, well, let's say $3,500 for fun, right? So you'll know that it will be $3,500 plus $1,500 would give you $5,000 as your beginning inventory cash. Your beginning balance minus the raw material purchased. My bad, not minus. It'll be beginning balance, the raw material purchase, and your ending balance. Let's say it's $10,750, $683,200, and your ending balance is $21,250. So if you want the direct material used, you'll take your beginning balance, add the raw material purchase, but subtract the end balance. So you'll get $10,750 plus $683,200 minus $21,250. And that'll give you $672,700. Your profit formula is one that all of you are familiar with, assuming you're older than 18. That is the y equals mx plus b formula. I'll explain more what the y equals mx plus b formula does in a little bit. But now let's look at job 25. Hypothetical, right? Your direct material costs $45. Your direct labor is $30.80. The manufacturing overhead is 3.6, and your overhead machine hours is 3.6, and your overhead machine hours is $6.40. The overhead is $23.04, and your total costs are $28.84. So to get the applied overhead, you multiply it by $6.40, and you'll multiply it by 3.6 machine hours. That'd be 2304. So let's move away from the numbers, because not everyone cares about the numbers, and to many of you the numbers don't mean anything. Before that, I'm gonna take a bite of rice. Watch him die. I'm gonna tell you now, you can't be a good managerial accountant without first understanding financial accounting. To be a managerial accounting, you focus on reducing costs in an operating segment. It also focuses on monitoring performance of an operating segment with a balance sheet. My bad, with a balanced scorecard. I said the wrong word. Balanced scorecard. For financial accounting, it focuses on GAAP, so generally accepted accounting based principles. Focused on reporting quarterly financial data of the organization as a whole. This is for the investors and the government. Managerial accounting relevant information. It's information that will make a difference in the decisions made by the managers. No doubt. And good managerial accounting information helps managers do their jobs. Managerial accounting is used by managers to assure appropriate use of an organization's resource, accountability for an organization's resources, and provides information used in planning, evaluation, and controlling functions within the organization. The following is not a way managers use managerial accounting, and that is they do not use it to communicate information to stockholders. That is something they don't do. They might do it to shareholders, but not to stockholders. Okay? Like I said, the update finished a while ago, and you could have clicked off a while ago. If you are curious to hear about this, just stick around. Okay? You might learn something. Which of the following is not a way managers are said to communicate information. Creditors are external users. Okay, so they're the guys on the outside. And managerial accounting benefits internal users. Managerial accounting includes reports and information, and they prepared for a range of decision makes within the organizations. So let's look at, say, another section. We need to identify each of the following costs incurred monthly by Furman Flowers Corporation as fixed, variable, or mixed. So let's look at balloons, insurance, delivery, employee compensation, and advertising. And we'll base it off bouquets sold. 3,000 bouquets sold, 5,000 bouquets sold, and 7,000 bouquets sold. In the 3,000 bouquets sold column, we have the balloons are costing $9,000. The insurance is, sorry everybody, it'll be 7,100. Delivery will be 5,300, and the employee compensation is 1,100. My apologies, is $11,000, and the advertising is $2,000. For bouquets, it'll be for 5,000 bouquets sold. The balloons are 15,000. Insurance is 7,500. Delivery will be 8,300, and employee compensation will be 1,000. My apologies once more. I keep misreading this number. $15,000. And the advertising will be $2,000. And then for 7,000 bouquets sold, it'll be $21,000, $7,500 in insurance, $11,300 in delivery, and then $19,000 in employee compensation, and $2,000 in advertising. We know that the advertising and the insurance stay the same. Always $2,000, always $7,500, so we can call those fixed costs. The balloons change in increments of, well, in the 3,000s. Okay, every 1,000 you add 3,000. So 9 divided by 3 is 3, 5 divided by 5 is 3, 21 divided by 7 is 3. So you know that those are variable costs. As for mixed costs, you know delivery and compensation are mixed costs. Because while they do go up by the same number, go up by specifically employee compensation because it was from 11,000 to 15,000 to 19,000, it's not variable cost because of how it works. Okay? It's mixed. Because it's 11 divided by 3 and 15 divided by 5 are not the same number. 9 divided by 3 is 2.667 and 15 divided by 5 is 3, so it's a mixed cost. As for delivery, 53 divided by 30, 15 divided by 50, 8 divided by 50, and 113 divided by 70 are different numbers. So it's another mixed cost. And we have other problems and equations, but I might as well just give you the big ones, right? The more like the theory of the math and not the actual math. Okay? So accounting is the financial rules to report transactions in an enterprise. You cannot learn managerial accounting without financial accounting. Raw materials go into work in progress, go into finished goods, and from finished goods you have to go into inventory or products. And from finished goods to products, that's the cost of goods sold. And from products you sell and you get raw materials again. That's what you're taking. That's your cash or accounts receivable. Inventory is the stuff you don't sell. It's the stuff you're storing. The IFRS, the International Financial Reporting Standard, and the US GAAP, United States General Accepted Accounting Principles, are what the rules that you need to follow if you want to be an accountant. And accountants prepare 3 sheets. They prepare a balance sheet, the income statement, and the cash flow statement. The balance sheet has left and right columns. The left column starts with assets, and assets are the cash, accounts receivable, inventory, and PPE. And those numbers go down in liquidity as you go lower. As for the right side, you get the liability plus equity, and that equals your assets, because they need to balance out, obviously. Otherwise, someone is cheating and doing something highly wrong, or someone's miscounting. Income statement, this is what the investors look at. They get the revenue, minus the cost of goods sold, minus the gross profit, minus the period cost, minus operating income, minus tax, and minus the net income, and that gives you the net income. No doubt. And then the cash flow statement is the investment cash flow, the operating cash flow, and the financing cash flow, and that gives you your net cash flow. You know that cash flow is money in period, and then net income is net cash flow plus accrue, and accrue is future cash flow increase. We know that financial accounting recognizes revenue, it recognizes principles, and managerial accounting calculates costs. Financial accounting shows investors the net income for tax and investment purposes. IFRS and U.S. GAAP do not regulate managerial accounting. Types of costs are fixed, variable, and mixed. Fixed are always the same. Variable are a slope. You can think of it as the y-mx working formula. And mixed is change. Okay, this is the mixed cost formula, where y is the y which is the mixed cost is y, which is total cost, is equal to variable divided by unit times the unit plus the fixed costs. And you can get these with a high and low to make a line, or you can use a regression analysis, but unless you have Excel open, you're pretty much guessing. And then the big formula that you need to remember from managerial accounting is that the operating income equals selling price minus the variable costs minus fixed costs. And the total profit function is sales revenue minus total variable expenses. And your contribution margin is always sell price minus variable costs. And your contribution margin per unit, like I said, is price minus variable cost. And your contribution margin ratio is your contribution margin divided by sales price. Your requested sales volume is the fixed costs divided by contribution margin over units. Your break even is always at operational at OI, operating income equal to 0. Sometimes you need to adjust net income to get taxed. Okay, you need to get taxes, otherwise you're cheating. Tell you your fixed costs plus net income divided by 1 minus tax over contribution margin divided by unit gives you your required sales volume. Or if you want just the pure net income, you get it's the operating income multiplied by the 1 minus the tax rate. So that's how we get total costs. So total costs go into two different sections, the product cost and the period cost. In product costs, you have direct costs and indirect costs. Direct costs are direct materials and direct labor. Indirect costs are manufacturing overhead. And then from the other section, you have the period costs. Those go to general and administrative costs and selling costs. Variable costs can your fixed costs and your period costs. Right, your fixed costs always have project costs and your period costs. Same go with variable costs. Product costs and variable costs is the cost of goods sold or the inventory if unsold. Fixed cost once again is the period cost or product cost. Product cost is cost of goods sold or inventory if unsold. The period cost every year goes into the income statement. And to get the product cost, you get the direct labor, direct material, and the overhead cost is the product cost. And your predetermined overhead rate is the estimated overhead cost divided by the estimated daily labor hour cost. And to give you some examples, if you know the sales price is $20 per unit, the variable cost is $16 per unit, and the fixed cost is $168,000, then your break-even point is when those numbers go to 0, so 20x minus 16x minus 168,000 equals to 0, 4x equals to 168,000, and x is equal to $42,000. That's your break-even point. If you know your fixed cost is $200,000, your contribution margin rate is 20%. You know your break-even sales is $200,000 divided by 0.2, which gives you 1 million in total sales. And you know the applied daily labor hour, 200 units in job 120, and it's 12,000 in direct materials, just 12,000, not 112, just 12,000. 500 in daily labor hours, $18 per hour, and the predetermined overhead rate is $6 per dollar per hour. You know you get $6 times 500, and to get your overhead costs, it'll be 12,000 plus 508, 500 times 18 minus 500 divided by times 6 gives you $24,000. Yes, that's correct. And for the last question of the video, before I go away and leave you guys to be, we know that applied labor cost is what they're using. We need to use something like labor hour. It's better. Estimated overhead cost is $978,850. Daily labor hour is $44,860, and your daily labor cost is $834,398. So to get the direct labor hour, to apply the direct labor hour, you get $978,850 divided by 44,860, and you get $21.82 per direct labor hour. If you guys, for some reason, managed to stay through my rambling, I salute you, because, you know, I was a bit incoherent during that. But those of you who did, I want to thank you all so much for watching, and I hope you all enjoyed.